If you start commingling your money and have personal money and business money together, you've tainted your LLC. So that's another key point. Have separate bank accounts and don't commingle personal and business.
Ladies and gentlemen, we are bringing on our latest guest, and she signed up for our Hall of Fame package. So you're going to get everything Katrina has to offer, and I promise it's going to be worth it as she specializes in accounting, right? And we're going to talk today about the importance of starting your planning now, right? Getting prepped because there are certain dates you need to know, certain things you need to have done, and I'm very grateful for bringing her on. I don't get to bring a lot of accountant entrepreneurs on the show, right? Big shout out to Joe at Bedrock. He's been on a few times. And now we have Katrina, who she tells us all about how the tax code isn't fair, but that's opportunity as a business owner. I love that. Katrina, welcome to That Entrepreneur Show.
Thank you, Vincent. I'm so happy that you invited me because it is time right now to really think about tax planning, and we're going to dig deep into that. So, thank you again for inviting me.
Oh, you're very welcome, everyone. One of the beautiful things about podcasting is you get to connect with not only people you don't know, but people all around the world who can add value to your lives. Remember, in life, we're only good at a handful of things. So as long as we have an open mind to learn and be a sponge, that's what this show is all about. But I want to welcome everyone back to That Entrepreneur Show. Please remember to subscribe to stay current on this top 2.5% global show. And again, today we're bringing on Katrina, who brings her perspective as the CPA and tax strategist behind some of the most profitable agency owners in the industry. And after climbing out of 100K of debt, losing 80% of her income overnight, she rebuilt her business using the same advanced tax strategies and wealth building tactics that the top 2% of the wealthiest rely on to protect and multiply their money. So I love her vulnerability. We learn through lived experiences, right? Textbooks are great, but there's nothing like what Katrina is bringing here today. And we are brought to you by Coming Alive Podcast Production.com. Head there today to start your journey. But first, Katrina, we're going to back up a little bit in time. What led you to want to become an entrepreneur in this chaotic world we live in?
I love entrepreneurship, and it started when I was in high school because I took accounting. It was all about numbers. I love seeing the numbers. Went to college, studied accounting, but I did not realize the benefit of really knowing numbers and how it impacts entrepreneurship. I never was a corporate girl. So I worked for corporate, but that wasn't me. I wanted to work with who I love to work with, what I wanted to do, and plan my own future. I was at a company and they came in one day and said, everyone in the company is fired because our company is filing bankrupt. I didn't want to be in that situation. So I found tax strategies by going to a conference that Robert Kiyosaki, Rich Dad Poor Dad, had. I met his tax strategist. I said, I want to learn everything that you know. I became her consultant. I've started working with the wealthiest in America. And I found out there were so many entrepreneurs that did not know this. It was a closed gate. And I wanted to open that gate so that other people knew how to utilize the tax code to their benefit. And I began my company doing that.
I absolutely love that, and I appreciate you sharing that corporate connection where, unfortunately, everyone, if that's happened to you, you are not alone, right? It's very unfortunate, but Katrina is here, living proof that being fired, right, when a company goes bankrupt can be the opportunity, right? That word again for a great and fruitful future, which is what she's here today. So before we get into those immediate tax tips, right? Everyone, Katrina is part of a 10 episode series. So we're going to be breaking down accounting tips, principles, everything you need to know throughout. But we're starting with what's needed right now. Katrina, name of the business, and then, of course, what we need to be focusing on right now. The floor is yours.
Thank you. I love talking about tax strategies, and it's the perfect time because the sooner you start impacting with tax strategies, the more you'll save. The IRS code was made for business owners and investors because we spur the economy. We hire people, we buy goods and services, and we produce.
Yeah.
And most people don't know. You hear about the big corporate giants, but small businesses and medium businesses make up 50% of the employment. That's amazing because you don't think that. So we are very important. And one part that we are lacking is really learning about tax strategies and how the wealthy use the tax strategies. So I'd like to go over a few if that's fine.
I
All
think our
right.
audience would love to hear some of these tax strategies. And if it's all right with you, we'll start maybe assuming that and if it's all right with you, we'll start where maybe some of the beginning strategies, right? And then we'll
Yes.
work our way into some of the more sophisticated and higher earning strategies.
So let's start as a business owner. Turn off my phone. I thought I did that. As a business owner, it's so important to first have the proper structure. I find that a lot of people learn about LLCs and they think LLC is just the way, but they don't realize LLC is not a IRS recognized entity. It's a state level entity. As an LLC owner, you choose how you want to be taxed. A sole proprietorship, S corp, C corp, or partnership. That's where it begins. And a lot of times I will ask the client, what type of entity do you have? I have an LLC. How are you taxed? I don't know because the lawyer is not telling you that. Tip number one, when you hire your lawyer, hire a tax strategist. Some people feel like, I'm not large enough to pay for a tax strategist. Well, are you large enough to lose money? So why lose money at the beginning when you can avoid that? There's a strategy to go from an LLC to an S corp. That could save you if you're making $100,000 profit. That could save you thousands of dollars just by making that one entity election. So that's why I say start with the proper structure. If you're going to sell, if you're going to franchise, you need different types of structure, and LLC may not be the proper structure for you. So make sure you understand your end goal. I like to start with the end goal. I'm going to ask the client, what do you want? Everybody doesn't want to have a multi-million dollar company. Some people have a lifestyle company. They want enough so they can travel. Like you mentioned, you want to do what you want to do. You want to live your life, and it may not be always building this multi-million dollar company. So I need to know what is your goal.
Yeah.
Then we're going to look at, do you have family members? Are your family members working in your business? You can hire your children to do tasks such as taking out the trash, opening mail, checking your email, social media, because they're great at social media. Hire your children, and that's a deduction for you. Now, it has to be a job description. They have to work. You're not just putting them on payroll. They have to work, and you have to pay them a reasonable salary. I just did this with a client. Their child is in college. He is doing their social media because he's in college. He has to travel back and forth home. He lives in a different state than where his parents live. That's a deduction, a travel deduction for your employee. Then we also are paying for his college education. As an employee, you can pay $5,200 in education as long as it's related to your business. So, because it is a business, he's taking business classes. Now that education for your child, who is your employee, is also a deduction. His cell phone, he's an employee, is a deduction. Those types of things are important to really understand that you are missing out on deductions because you don't know the tax code. The tax code is over 7,000 pages. And who has time to do that? And with the regulations and rules, some people say it's over 50,000 pages. So knowing that you need a strategist who knows your industry, and that's very important when you're picking a CPA or accountant, look for someone that knows your industry. I don't work with restaurants. That's a whole nother field to understand loss of food, spoilage. I don't do that. I specialize with agencies who do production. So it's just podcast agencies, PR agencies, marketing agencies, and event agencies. I also work with real estate professionals. So that's so important to know who you're working with and they understand your business because they're going to know what's reasonable and necessary. That's how the IRS, ordinary and necessary, that's how the IRS defines what can be deducted. It has to be ordinary and necessary, and that's a broad term. So that's one key tax deduction that I say is huge. Hire your child, and you can also hire your spouse, but it only makes sense to hire your spouse if you're doing it just so they can have benefits. Because remember, their wages are still going to flow to your personal tax return. And a child's wages, they have their own tax return and they're usually in a lower tax bracket. So that's called income shifting. You're shifting it from your high tax bracket, you may be in a 30% bracket, to a child's lower tax bracket. And if they make, the numbers change every year. If they make, I think this year 2026 is like 14,200. If they make under that amount, they don't even have to file a tax return. So that's money they're getting, and you're able to allow them to shift money from your higher bracket to their lower bracket.
Oh my goodness. Well, thank you so much for really clarifying because you hear that a lot. I'll hire my kid, I'll hire this, but how do you do that and what do you do it for? Everyone, be sure to stick around to the end of the episode because you need to find out how to get in touch with today's guest. And you mentioned something there too earlier, the LLC S corp, right? I'm an S corp. That was the advice I got when I started out.
Mhm.
Why do you think LLC is just like that? People just do it without maybe understanding things, or why is because yeah, I come across, oh, I have an LLC. I'm not a tax specialist, so I don't often contribute conversation, but I noticed. Why do you think that is?
TikTok told them. But LLC is a great structure, but a lot of times people don't know why they're doing the thing. They're doing it because they are hearing it from someone who may not be the best source. LLC is a great entity structure depending on each state. Each state has its own laws because the LLC is a new type of entity relative to C Corp partnerships and S Corps. So the law is at the state level. Remember, LLC is not recognized with the IRS. It's a state level entity. So all the laws and your asset protections and everything that goes along with the LLC, which means limited liability company, it limits your liability. That's what's important. But there's certain ways and things you have to do. If you start commingling your money and have personal money and business money together, you've tainted your LLC. So that's another key point. Have separate bank accounts and don't commingle personal and business. The reason you want to not do that is because when the CPA tax preparer is working on your accounting and your taxes, it's easier not to commingle. The second reason, if you're audited, now you've exposed your personal and your business life to the IRS, and they will start asking you for records for both. So you don't want to commingle, and you want to not taint it, because if you do commingle too, then you're more open. If you do have any type of suits or anything related to both, they're commingled together. But an
That's
LLC is a great structure in a lot of ways, but you need to know when and how to use it.
That's amazing advice because in my early entrepreneurship days, when money gets low, then I have to pay for things out of my personal. So I always have to do a separate sheet to give to my accountants to let them know which charges that I used on my personal. That's great advice. And I mean, we still got a little time left. So I want to not give too much away in episode one, but if we could do one more tip before we get you back on the show, I think that would be awesome. And then I promise everyone, I'll tell you how to get in touch with her.
Let's talk about the automobile expense. So, the
Yeah.
one big beautiful bill brought this excellent tax strategy back. It allows 100% depreciation on a heavy SUV. So, a SUV that weighs over 6,000 gross vehicle weight. You can purchase that in your business. If you use it 100% in your business,
Mhm.
you get that 100% deduction. I had a client just bought a Rivian. So that was like an 85,000 truck. He was able to save $22,000 in taxes. So that's real money in tax savings because he bought that. He was also able, because he bought it before the deadline on the EV credit, he was also able to get the EV credit. Now that's gone away. Now is the time. If you're looking to purchase a car, don't just go get it because of the tax credit. Because remember, you're paying 85,000, but you're getting 22,000 back. But purchase it if you need that vehicle in your business. Now, if you don't drive it 100%, but you drive it at least 50%, you're still getting a 50% deduction. It's just allocated. So instead of getting that 85, he would have got like 47. Okay. So it's not gone if you don't use it 100% for business. But if you use it some for personal, what you have to do, depending on how you're structured, for example, if you're an S Corp, you would say the business purchased it. Now you're getting the write-offs for gas, you're getting the write-offs for insurance, you're getting the write-off for car washes, oil changes, all of that. Pay that through your business. But the personal use that you have as an S Corp, you just report that as a benefit and you report that on your taxes. So it's still a great way to take that deduction. If you're thinking about purchasing a car, you need it, consider doing it through your business.
I love that advice, and it's certainly even for my next vehicle because I am a remote where I'm always on the road if I am working. Before I get the contact info, right, before we prep everybody for your next show, I don't know this, so I want to ask, is there something with the Mercedes G-Wagon that gives some kind of tax break?
That's the same one. You just see everyone on Instagram talking about that because I guess the G Wagon is the cool car now. But that is what is happening. They're getting that deduction because it's a heavy SUV. So
Mm.
like the Rivian, I think the BMW X5, so the Yukon, the Cadillac, the Denali's, the Escalade, all of those would qualify for a heavy SUV. So as long as it's 6,000 gross vehicle weight, most dealerships promote this. So if you go to any dealership and you ask, they're going to show you the car that qualifies. But
Yeah,
if you open the door, inside of the door, it tells you how much the car weighs. So
yeah.
it'll tell you the gross vehicle weight inside
Yeah,
of the
I
car.
had read it in some kind of article not too long ago, and then the truck sparked my interest. But I'll tell you what, Katrina, your first show in this series, I don't think disappointed in any way. You brought your A game, and I know I'm already on the edge of my seat for your next episode. As a reminder, everyone, Katrina's doing a 10 episode bonus series with me so we can really get you feeling comfortable with the things you need to know. And of course, have a professional standing by if you do need some help, which is my next question, Katrina. Before I get everyone to pay attention to my last question of which entrepreneur throughout history would you choose to sit down with? Where can we find you online?
You can find me online at katrinamcraft.com. So I'm there. I'll also have a special link that I'll share where you can get my 7 best tax wealth building tips. And it's a guide that many business owners are missing. So you need that before you file your taxes this year to see if you're able to institute any of these types of tax savings. So I'll have that guide for you.
I love it, everyone. Make sure that's Katrina with a C. Head to that website now, get that guide. But before I let you go, which entrepreneur throughout history would you choose to sit down with, Katrina, dead or alive?
I like Robert Smith. He's
Okay.
an investor and I like his heart of giving back. Like he gives so much back to the community and he paid for a whole college graduating class. He paid for their schooling. So they left with no debt. So I like that he really mastered going from tech and then developing businesses and developing funds so people could invest and grow their wealth. So he would be one I would love to meet.
I absolutely love it. Well, everyone, we have to make sure we tag away for Robert. And today is brought to you by Coming Alive Podcast Production.com. Please remember to subscribe to stay current so you don't miss all of our entrepreneurs, especially Katrina's, because we've got a couple coming your way. We're really excited about putting together this series together. And with that, we're signing off for episode 1. Thank you, Katrina.
Thank you.
Thank you for tuning in to another episode. I would love to hear your feedback. What did you love? What do you want to see more of? Are there any questions you would like me to ask the guests who come on the show? This show is not possible without you, the amazing listeners, so please email us at podcastsbylancy@gmail.com and let us know what you think. We'll also feature you on a later show. Please remember to subscribe to stay current with our amazing community of guests who will continue to come on the show, sprinkled in with solo episodes from me, Vincent A. Lancy. With that, I look forward to introducing more shows to you each and every week. And with that, we're signing off today. Enjoy the episodes and make it a great day ahead.